Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to look at the dollar, yields, precious metals, and work our way through different commodities and ETFs, at least the ones that I follow. And I'm going to interject my financial opinions all over the place. They're just opinions, not to be used as advice. And if you guys need any help with anything, you can obviously join our community at finding-value.com. You can become a platinum member, and you can still get a discount using the word discount in the coupon code. So we're going to dive in here, give you a whole bunch of opinions, and I'll let you know what I am seeing in the charts. So the DXY, that is relative strength indicator. We are sitting on top of support. The white line is that big support level that we've hit multiple times from underneath. Now we're hitting it from above. We're using it as support right underneath us, and I think we are going to most likely head higher with the DXY. Why do I think that? Well, we're on support. We've got a bullish candlestick today called a hammer candlestick, and interest rates are breaking a pattern to the upside on the 30-year yield. The shorter term doesn't look as solid. There's no clear chart patterns, but I'll show you what the 30-year looks like. So the 10-year yield, we'll start there. It's higher today, 2.15%, but we're still in this pattern. It's not ready to break out yet, but we're on support of a very long downtrend line. That's where we're at. Logarithmic even looks better, and we're sitting on top of support just like DXY. So we've got most likely ready to go higher with yields. The 30-year yield, TYX, is starting to break to the upside of its pattern here. Bullish for higher interest rates. When we back out on the 30-year yield, we've broken the downtrend line, major breakout, and now we're breaking out of a pattern to the upside. That, to me, looks like higher yields. And when yields increase and we see a monetary tightness in the we should say monetary tightness in the United States leads to a stronger currency relative to other currencies, generally speaking. So that's what's happening. Bond prices are going to head lower here. If we continue with that breakout, we could see a breakout to the downside on the 20-year bond price. Yields higher, prices lower. So that's what I'm looking for. We got the 30-year to break. The 10 years kind of and then the 20-year bond prices is getting, it could head lower here. Looking at this chart. So if we back out, that's what it looks like. And if we drop down, we could see a big move for bond prices going lower. This is fuel for gold prices. If people are running away from bonds, they're going to have to put that money somewhere else. And we could be seeing a run from the bond market. This could be a potential problem in the bond market. Not looking good. The TYX-TNX ratio, which is a measurement of those two yields in relationship to each other, was slightly lower today. It didn't really go much of anywhere, just slightly lower. So it's not going to have a huge impact on gold, but gold could break away from this correlation here where gold goes up when this goes higher. It could break that correlation. It did in the 1970s. And that's also what we're looking for, a big break in that correlation. And the 2-year yield, the short one, was also up 2.22%. So the yield curve did invert a little bit, and we are higher with yields across the curve. Looking at commodity prices now, knowing what yields have done, commodity prices heading higher. Is this a bottom, and are we ready to start wave 3? I don't know that with any certainty, but if we start to run here, we could see a big old move in commodities. And what it's going to be is it's going to be rotating money from the bond market and potentially the stock market into commodities and precious metals. That's the thesis of the channel, given where we are in the credit cycle and business cycle and real estate cycle. The CRB to S&P 500 was higher, 1.8%. We've got a retracement almost down to 0.618, which is this green line here. That's generally the retracement level that you get between wave 1 and wave 3. So it's the wave 2 pullback. And we're right there, just above it. Gold slightly higher today, up $4 or so, $4 or $5 an ounce. Gold does not like higher yields. It likes lower dollar and lower yields and the curve uninverting, generally speaking. But we got a little update today. And again, we could go either direction here. We have a stronger selling pressure day, which means we could go lower. But we also have a lot of support all through this zone there. So we're sitting on top of support or very close to it. Silver slightly lower. Again, it doesn't look bad. I like it up here. We also have broken a large downtrend. A large downtrend line that we've broken. So that's looking good. Platinum also heading higher, 1.5%, up $15.50. A little wick at the top, but we're up against resistance right now. If we can break above and hold above 1080 on a monthly closing or something like that, that's going to be very positive for the price of platinum. XAU to gold ratio slightly lower, but we are approaching the ultimate line for happiness. If we can break this line, guys, we have broken out of that downtrend. I'm going to be hyper bullish on the gold and silver mining companies, given the state of market conditions, given how bonds could have problems, banks could have problems. A lot of demand could be going towards physical metals and the gold and silver mining companies. GDX, so basically flat in GDX today, down 0.11%. We are against that resistance level. We back out, that's the resistance level. And I have it on a monthly candlestick. So that's what it looks like on the monthlies. We're right on top of it. GDXJ up 0.31%. That's looking good. Especially with gold slightly higher, you should see these things be roughly around 0. So roughly flat. And that's what we're seeing, roughly flat in GDXJ. SILJ is also flat, 0.09%. It is outperforming silver because silver was down just a little bit. But more or less just flat, and we're sitting on top of a breakout of a pattern. Looks good to go higher. I really like the precious metals mining companies. Crude oil up 2%. And I know people, is it a bottom? Is it a bottom? We're going to have to wait and see, guys. We've got large selling pressure over here. We've got a reversal candlestick there. We've come on up, and now we got to see, are we going to blow through this, or are we going to contract down and get even smaller candlesticks and roll back over? That's what we're looking for. We are on top of support. That's what this guy is here. It's a hammer candlestick. We got our surge higher. Now we got to see how sustaining that surge is, in the short term at least. Longer term, I'm a definite crude oil bull. Natural gas also looking better today, 4.77%. Again, I think we're going to move sideways until we start breaking some trend lines. So let it work its way out. It may take some time. And we're going to have natural gas pull back and or the demand creep higher. There is people talking about increased demand because of natural gas switching from coal. So they're using less coal, switching to natural gas. It's cheaper, it's cleaner, and more demand could be hitting natural gas. We also could have a warm summer, more electricity generation from natural gas, and we could also have cold winter, which is also more heating. So we've got that going on in the background. XOP, yeah, you know me, it is up today, but I'll be honest, guys, not a confidence-inspiring candle here. It gapped up and then got sold off throughout the day. So the momentum is coming back to the downside for XOP in the short term. OIH is also, with that gapped up momentum coming back down, we have lots of selling pressure. So it went boom, 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 like it fell off, a tree or something, It struggled to come back up. We have another big selling pressure day there. So I'm interested to see which direction this chooses to go in the short term. It's a pretty tough read. We do have support underneath us, and I'm waiting for more data. Sprott Physical Uranium Trust still hanging out on this breakout area. We need to get moving. If we're going to break, we got to get the buyer step in here and get us moving to the upside. We want to break 1815 for the long-term resistance level. URNM up 0.6%. I call this the bloody nose. It's kind of just a little down day or sideways day. It is up. And we'll see where we go. Again, I'm not trying to make predictions here, but based off of the trading, everything still looks fine if it wants to push higher. TAN moving slightly lower today. Again, I'm not a believer in the solar companies or wind. I think they are just gigantic commodity consumers, and their prices are determined by the commodities that go in it. So when you look at this, yeah, we could pull down, but the chart does look good to go higher eventually. It's a symmetrical chart. You cut this in half, this side looks like this side for the most part. COPX up 0.97%. Again, I think it looks fine. There's nothing wrong here. Could this be a shoulder, head, shoulder with kind of a jacked up neckline? I don't know. I wouldn't call it that, but it's hanging in there. It's doing all right. It's above support. Everything looks decent. Looking at lithium, we're still moving sideways for the most part in a falling wedge pattern, which is generally a bullish signal for an eventual break to the upside. REMX also looking quite good, especially on the monthly. We're putting in a bullish candlestick for this month. If it were to end strong, I would definitely be bullish for a move higher. Is this priming itself for an everything type rally? We've got rare earths looking good, lithium looking good, copper sitting above support, uranium looking pretty good. We could see an everything rally. It's possible. The S&P 500, it is sideways today. And we're coming into this, I would say, rising wedge. A rising wedge is generally bearish, but we could break to the upside, and I would turn ultra bullish. That's the problem with short-term trading. It can go either direction pretty quickly. Overall, I think at best we go sideways in a longer-term pattern over the next decade to slightly lower. And it could be a lot lower depending on what happens. If interest rates continue higher, that's a headwind for S&P 500 and NASDAQ and these other stocks. We could see a big move to the downside if the interest rates start to heat up. The NASDAQ would also be subject to those increasing interest rates. So we'll see which direction we go here. We're kind of at a big decision point for a lot of these companies. I think commodities are rolling higher, and we'll see which direction bonds and the overall stock markets go. Those could be the things that fuel the commodity boom. Emerging markets moving sideways. It's been doing that for a while now. We've got XHB up 0.6%. The home builders are being extremely resilient here. I actually like the home builders and a lot of their charts. So it looks pretty good. Moo down 1%. Again, I think we're going to head lower back to this support level over time. Copper up 0.84%, still sitting on top of the support level that copper has. So here's copper. There's the big, huge support level it's sitting on top of. Lumber down a teeny bit. Again, that's really just a sideways day, and we're right at that support resistance level that goes back to the mid-90s. Iron ore down a little bit, but that is a bloody nose. I do think we are going to head higher in iron ore. That is a retest move, a breakout, and then this is your retest back where we're at. Nickel down 3.44% on the dailies. The weeklies still look good, but we're down a little bit on It's like right here or something like that. Aluminum up 1.05% today on the daily, still chopping sideways for aluminum. I do think eventually this is going to go to a land far, far high away, somewhere way up here or higher. It's off the chart for aluminum in 2024 or something like that. Baltic Dry Index still looking good, up 0.84%, and I do think it will continue higher and grind its way on up. Newcastle coal down 0.6%. We are seeing switching from coal to natural gas, and I do think we could come even lower in the springtime, which we're in. Ethereum moving sideways, still looking fine on top of support, and Bitcoin also down a little bit, but still above support. So that still looks good. An inverted head and shoulders, that generally means higher, and we'll see where it goes in the short term. Maybe we have a retest back to this trend line. But that's what we've got for today, guys. That's what's going on. Lots to watch. Interest rates looking like they're breaking higher. It's going to put pressure on certain sectors. Well, directly bonds, because that's what's selling off. And stocks could get some pressure with higher yields. Those higher yields are going to cause that money rotation back into, I think, commodities. And we'll see what commodities do. We'll see what oil prices do. Everyone thinks that a recession is here. Everyone is predicting a recession. It seems like it. Everyone is very bearish. That's generally when things go up. But we'll see. And if interest rates continue higher and if commodities start to take off, we could see kind of an everything rally in commodities. So hopefully that's the case. And maybe we're starting from wave 2 to wave 3 in commodities where we get a next gigantic leg higher. Again, I'm not claiming that's going to happen. We're going to sit here and watch it together. But I'm watching for it. And if we get a big old move, I'm already in these things. It doesn't really matter whether it goes up or down. Down, I buy more. Up, I make more. That should make that some sort of comment. Down, I buy more. Up, I make more. But that's what we've got in the markets right now. That's what I'm seeing. Thumb up for the content. Subscribe to the channel. And I'll catch you guys later. This is Finding Value.